Hello and welcome to the Octo Members podcast. I'm Katey Pigden, Content Director, and today we've got a very interesting topic about Bitcoin. So I'm going to allow my guests to introduce themselves because you've got a pretty fancy title. Dan, over to you.
Thank you, Katey. Yeah, my name is Dan Parkinson and I'm the founder of the Bitcoin IFA, which is a new firm aiming to educate financial advisors on Bitcoin.
Okay, so that's really an important sort of thing, that educational piece. So I'm going to be that one that sort of says, what is Bitcoin? I know it's a very complex area, and I know you have studied, and there's many hours that we could be talking about this for. But if someone has heard the term but doesn't really know, what would we say to them in terms of an explanation?
Okay, so I'll try and keep this relatively succinct. Bitcoin is essentially two things. It's decentralized money and it's non-governmental money. So let's dig into what those mean. So Bitcoin is decentralized money. For about 10,000 years, we had decentralized money in the form of gold. And Bitcoin is essentially digital decentralized money. So it's the nexus point of tech, money, and decentralization. Gold is decentralized money, but there's no technology there. So Bitcoin is essentially an improvement on all of the characteristics that make money. So you want it to be portable, fungible, divisible. There's a bunch more, and I always forget them off the top of my head. And Bitcoin essentially improves on gold in every single way. So Bitcoin is analogous to digital gold. It also removes money from governments. So prior to central banks, which all came in around about 100 years ago, money was essentially a private user's thing. So I had my gold. I stored my gold in a bank. Both my gold was private, the bank was private. And the bank gave me pieces of paper, which were bearer instruments that I could exchange for my gold. So I could take, instead of having, if I was in San Francisco and I wanted to go to New York, I didn't have to carry kilos or tons of gold. I could carry some paper and then at the other end, exchange that paper for the gold again. Right? But gold is very difficult to transact with. So that's why we came up with paper. Then central banks came along, centralized everything, and essentially put money in the hands of government. And we're about 100 years into that experiment. That experiment was going relatively well until 1971, when the US unilaterally took the world off the gold standard. So then our government centralized money was no longer backed by our government centralized currency was no longer backed by a hard money like gold. We are 54 years into that experiment, and I would suggest, in my opinion, it's not going very well because they are printing and printing and printing. When governments are in control of money, something will always come along. There will always be some kind of natural disaster or, some emergency need for them to print more money. And that is very clearly shown by the fact that the US increased their debt ceiling just 2 months ago. It was at $36 trillion and they increased it by $5 trillion. They have already eaten about 1.5 trillion of that 5 trillion in 2 months. So they've increased their debt levels by 4% in 2 months. It's about 24% a year. If you or I were increasing our debt at 24% a year, we would be classed as insolvent.
Yes, absolutely. Yeah, well, yeah, lots going on in the world, as we know. Money, like you said, that physical thing, it effectively is that IOU, isn't it? And we're trading in that sort of sense. So there's lots of headlines around Bitcoin. I've been writing for a financial advisor audience for a number of years now. And one of the things that I sort of saw initially was people saying, not touching it with a barge pole. Cryptocurrency, absolutely no way, not for me. And what was your thoughts initially when we started coming across this? I think I was very much the same. I was like, this just sounds dodgy. I've no idea what's going on. And I think that fear of the unknown, I suppose, we've had that with a lot of things, lots of different technology as it comes along. Were you skeptical initially? What was your reaction?
Great questions. So there's a couple of things that you've touched on there. So the first one was using crypto and Bitcoin interchangeably, and what I should have said in my previous answer. So I told you what Bitcoin is, but I didn't tell you what Bitcoin isn't. So Bitcoin is not crypto, and crypto is not Bitcoin. Bitcoin should sit separately it is analogous to digital gold. It's essentially a digital commodity, a store of value. Crypto, and there's millions now, they are more analogous to tech stocks or penny stocks. So 20 years from now, I can't tell you which cryptos are going to win. But I can tell you, in the same way, if you went back 20 years, you couldn't have predicted the Mag 7. I think only 2 of them existed, maybe 3. But you could have predicted that gold would still have value and would likely increase in value in 20 years from now. So in that same way, Bitcoin likely to increase in value over 20 years, likely to still be winning, in my opinion, not financial advice. Crypto, some of them have utility and some of them will win, but the vast majority will fall by the wayside as technology improves. And, the absolute vast majority are penny stocks that are just, useless, right? The likes of unicorn fart dust, for example, right? So Bitcoin is not crypto. Crypto is not Bitcoin. And to the other part of your question, what did I initially think? Well, I actually came across Bitcoin before I got into traditional finance. So I was a Bitcoiner before I retrained as a financial advisor. But for the first 8 years, I first heard about Bitcoin in probably 2012, and it was 2020 before I properly researched it. And for those 8 years, I dismissed it as a Ponzi, nonsense, right, initially. And then when someone told me exactly what it was, so after 3 or 4 years of dismissing it, the story I told myself was, this is a Ponzi, this is rubbish. Then someone actually ran me through what it was. And then the story I told myself was, well, this is too disruptive. Governments will never allow it. So instead of doing any research, I just told myself this story and acted in a very uncurious way. Once I actually started going down the Bitcoin rabbit hole, and it takes probably 100 hours of research to really get your head around it, be able to talk about it confidently. Once I'd done that, then you realize that actually this thing, it can't really be stopped. Governments can't disrupt it. We're well beyond the point of, it going to zero, it failing. So my thesis on Bitcoin since retraining as a financial advisor hasn't changed, which is this thing is going to help millions, if not billions of people. Most advisors, I think, are still in that mindset that you described, that, they don't want to touch it. And I think the majority don't want to touch it because they don't understand it. It's not necessarily that they think it's a Ponzi or that it's going away and it's going to fail. Some still do. Some very well-respected people are in my LinkedIn DMs saying, I think it's going to zero. And I would challenge anyone to come up with a coherent argument as to why they believe it's going to zero. I'm very interested to hear why, in case I have any blind spots. So one of the things that getting into Bitcoin has done is it's caused me to be curious about everything. I wasn't curious before. I was too busy, too stressed, wasn't curious. Bitcoin has changed that.
Yeah, I think that curiosity with a lot of things, isn't it? If something's new, we don't know about it, we're not sure about it, that's not going to catch on. And I'm pretty sure we all use the analogy of like blockbusters sometimes that didn't sort of see that world shifting and changing. I think when we get on a plane, we take that for granted, but we don't really question that technology. But imagine the first thing of someone saying, get on this thing that's going to fly in the air. So, sorry, what? What's happening here? But you're right, it doesn't seem like it's going away. And I think maybe that was the thing at first. It was like, well, this is never going to last. That's going to fade away. And that hasn't been the case. And that's why we do sort of keep seeing it. So are we noticing then that there is a bit of a shift in the mindset from some advisors that are curious and starting to try and find out a little bit more, and obviously probably having conversations with yourself and other people in the wider community as well?
Absolutely. I mean, I would say almost every advisor that I speak to who is in their 40s or below has actually bought Bitcoin at some point.
Right. Okay.
It tends to be the older demographics that are a bit stuck in the mud, shall we say, set in their ways. But the younger generations, I mean, my email inbox is full of young, hungry, ambitious, curious advisors in their 20s who are looking for firms that can talk and advise about Bitcoin. I mean, a lot of them have reached out asking if they can join me. I'm not an IFA firm. I train IFA firms, but there is a growing demand among younger advisors to be able to talk about this and to be able to advise on it. And I think it's because they are living through the secondary and tertiary order effects of currency debasement, which is asset prices are ballooning because when we print money, it finds its way into assets. Right? CPI doesn't track assets. So inflation figures, I need to be very careful how I word this, but in my opinion, CPI and inflation figures are nonsense because they don't track asset prices, right? If the S&P and the NASDAQ return 12% a year, that's realistically your hurdle rate, right? So when 20-year-old advisors that move to London and they're ambitious and they want to make a career and they want to make a life for themselves, and they see that the average house price in London is 10x their salary, those are the secondary and tertiary effects of money printing. Bitcoin has returned 125% CAGR since inception. It's returning 60% CAGR since 2020. So larger Bitcoin allocations for younger generations is a no-brainer for them. That's the way they see it. This is the route to having a lifestyle analogous to their parents and their grandparents, probably more like their grandparents.
Yeah. So that curiosity thing, that is a lot of that being driven by clients, because I guess you wouldn't want to be the advisor that a client comes in and says, I've heard about Bitcoin. Should I be investing? How does it work? What do we do? And if an advisor just dismisses that completely.
It's a really good point that you've touched on there, right? Every advisor wants curious and low time preference clients. Low time preference meaning they want to be invested for the long term. High time preference is, you want to trade in and out every 15 minutes. In my experience, the most curious people tend to be the highest achievers. So everyone is looking for curious and low time preference clients. So if a client comes in, there's nothing worse than an ambivalent client that doesn't really take an interest in what it is that you're trying to do for them. So if a client comes in and wants to talk about Bitcoin and you just dismiss it, this is a Ponzi scheme. This is nonsense. It's bad for the environment. It's only used by criminals. Pick your common misconception. You're doing a number of things to harm yourself, right? So the client is taking an active interest in their portfolio. They've probably become emotionally invested in this, and you're just damaging that. You're damaging that relationship. I want to be very clear. I do not recommend anyone buys or invests in Bitcoin. I recommend people educate themselves on it. And if you educate yourself on it and you have a really good evidence-based reason to not invest in it, that's great. Have an open and informed discussion with your curious client. But if you just dismiss it because all you want to do is sell them another 60-40 portfolio, sell them another ISA, you are going to lose that client or potentially not win that client. So I always say there's nothing important that you're going to lose by not being educated on clients, except not being able to talk about Bitcoin, except clients, assets, and staff. Right? Only those three things. Because the average demography of Bitcoin owners in this country is 35 to 54-year-olds. Over 50% of them are in that age range. These are your future high net worth clients. These are the children and grandchildren of your current retirees. So the families that you look after, they're already buying it and interested in it. 21% of the country, it's about 12 million people, have invested in crypto. 50% of them are in Bitcoin. These are if you want to grow your business with new accumulators, they are talking about Bitcoin. If you just dismiss it and actively dismiss their interest and their emotional interest and their emotional investment in their own portfolios, you will either not win that client or you will lose that existing client. Most likely, I can't say this with 100% certainty, but you are likely to lose assets, clients, and you'll lose the good, ambitious staff that are in their 20s and 30s and wanting to build a career.
You said about 21% of the UK population is invested into Bitcoin.
Crypto, not Bitcoin.
So only 9% of the population is seeking financial advice. So that's quite a shift in itself, because we talk about this advice gap problem. So potentially there, then, if someone could go and seek some advice around this topic, that would help increase, well, not increase the gap. We don't want to increase the gap, but sort of narrow the gap. You mentioned some of the misconceptions, something around like the bad for the environment part. Can I just ask about that then? Because obviously a lot of people would sort of say, well, what about the energy consumption? I have to admit, I don't know exactly how all of that works or anything like that. So I'll explain my naivety there. But people might have concerns about that if they are looking to have a sustainable portfolio. Or are they investing in the right place? They want to make sure they're doing the right thing for the environment, things like that. Is it a misconception? Why is it a misconception that it's not bad for the environment?
Massive misconception. Bitcoin is arguably the ESG friendly asset. So to touch on the energy consumption, first we have to, there's a bit of a linear process here, right? And I'll try and make it a lot quicker than I explain this in my workshops and webinars. So really, this is just going to be a brief touching on it. Bitcoin is backed by energy in the same way that gold is backed by energy and proof of work, i.e. it requires a lot of energy and a lot of work to mine gold, meaning when someone gives you gold, you know that it's worth a lot because there's a lot of proof of work that it's taken to get it to you. Bitcoin is no different. The difference there is Bitcoin mining doesn't pollute environments, displace communities, pollute environments with mercury and cyanide and blah, 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 right? But it does require a lot of energy. So that leads us on to, well, then it's bad for the environment, right? And that's a very common misconception. So because Bitcoin mining requires a lot of energy, and I mean a lot of energy, you cannot make money plugging a Bitcoin miner into the wall, right? Because the electricity, there is proof of work in the electricity. Someone has to mine the coal, drill the oil, drill the gas, whatever it is, refine it, ship it, and then send it down the wires into your house. You pay for all of that proof of work. And in the UK, we pay the highest kilowatt hour in the world. The US is about 75% cheaper than ours, right? So they pay 1/4 of our electricity cost, and it is still not economically viable to plug in a Bitcoin miner into the wall and make a profit. Bitcoin miners exist in a free, perfectly free capitalist environment, meaning they go wherever the energy is cheapest or free. The real way to make money out of Bitcoin through Bitcoin mining is they will approach underutilized sustainable energy creation and say, look, right, so this is things like solar farms in Texas, hydroelectric dams in Bhutan, wind farms everywhere. Somehow they're using volcanic energy in El Salvador. I have no idea how, right? But if you harness the free energy that the universe provides, Bitcoin mining becomes profitable. So what they'll do is approach a solar farm in Texas, for example, and say, look, you're running at 50% capacity because you're providing a bunch of electricity when the grid doesn't need it. Run at 100% capacity, prioritize the grid, but when the grid doesn't need it, mine Bitcoin, and I'll share the profit with you. So the electricity becomes free. Side note, I live on the south coast in the UK. There is a wind farm off the south coast that is visible from Eastbourne to the Isle of Wight, right? It's massive. Literally 25% of the south coast of the UK can see this thing. It provides a ton of electricity when the grid doesn't need it. Overnight, for example. We pay in this country billions to curtail energy every year, free energy. So, the wind farm is running, it's overnight, the grid doesn't need it. So they just earth that energy. And we pay through our high energy prices, we pay billions as taxpayers for them to do that. Right? There is a hydroelectric dam in Scotland that is built, fully operational, isn't going to be connected to the grid until something like 2030. I met a 20-year-old at a Bitcoin conference in April who is negotiating, basically running that dam till 2030 with Bitcoin miners. Now, imagine if the public did that, like the government did that, and we use that to fund public services, for example. So, got off track there. So, in order to make Bitcoin mining profitable, you need essentially free energy. Cambridge University released a study in April this year that showed that over 50% of the entire network is now powered by sustainable emission-free sources. So that includes some nuclear. They also highlighted that it was less emission intensive than all other global major industries. And I really like this. I put that out on LinkedIn recently, and someone commented underneath it, "I don't believe it's fair to compare it to all other major industries." And my response was, well, which one do you want to compare it to? Because it's included within all.
Yes, yeah. It feels like I've sort of stepped into a former life where I was a journalist at a publication called Utility Week. So I used to write a lot about energy and water and various things like that, and wind farms. And yeah, you're right. There's lots of times where the grid doesn't require, and actually my energy company often says to you, right, there's an excess amount of energy at the moment. Use some of your appliances and it's, it's the cheaper sort of way to do it at the moment because we don't need it. And equally, they'll tell you, actually, there is a bit more demand now. Do you want to try switching a few things off and see what you can save in that time and try and encourage you? So yeah, it feels like I've sort of gone back in a world there. But what about the regulation then around this? Because the FCA seems to have had a bit of a change of heart, and there's some new rules coming in soon. So could you talk us through that a little bit? So for an advisor audience, in terms of, is that being one of the things that actually this isn't really regulated? I don't really know where I stand with this, so it's easier not to touch it, but that it's opening up a little bit.
You're exactly right. Bitcoin is not banned, neither is crypto. Right? So you can buy it. You can go onto exchanges and you can buy your own Bitcoin. So it's not banned, but it's also not regulated in a way that, it's not protected by the FSCS scheme, for example. But prior to 2021, we did have access to what are called ETNs within our tax wrappers.
What's an ETN? Just for
sure. So you've probably heard of ETFs and maybe not ETNs. So exchange traded fund, exchange traded note. The difference between the two. So with a fund, the fund owns the underlying asset. And when you buy a portion of the fund, you own a portion of that underlying asset. So let's say the fund consists of 100 Bitcoin. You buy one of them. You own that Bitcoin. Admittedly, there's still a barrier between the fact that you're in the fund, because you're probably buying it within your tax wrapper, or certainly within some kind of investment account. You don't actually have access to the underlying asset, but you do own it, right? An ETN is a debt instrument. What that means is the provider doesn't have to buy the underlying asset. The fund does. The ETN doesn't. Now, my understanding is all of the European ETNs have chosen to buy the underlying asset, but you don't own a portion of it. A great metaphor here is, imagine if you own your house outright, mortgage free. So let's say within an ETF, the entire fund is just your house and you own 100% of it. Then it's yours. Right. And so when you come to sell it, you are selling your house and you get the money. If it was an ETN and the entire ETN was your house, when you come to sell it, you're not actually selling your house. The ETN provider would have to sell it if they wanted to, or they promise to pay you the value of the house. So it's not actually yours. They're fairly similar. It's a pretty minute distinction. But an ETF is just slightly safer, let's say, because you do own the underlying asset. With an ETN, you don't, and the provider doesn't have to buy the underlying asset. ETFs exist within the UCITS rules, which say that you can't have a single asset or a single commodity fund, right? They have to be diversified. I think it's a minimum of 5. Don't verify what I'm about to say. I think it's a minimum of 5 assets. So each asset can have a maximum of 20% exposure. I think it's that. It may be different. Whereas an ETN doesn't sit within UCITS rules, so you can have single asset ETNs. So the FCA banned the ETNs in 2021. Side note, the price of Bitcoin at the time was $10,000. The FCA is lifting that ban on the 8th of October. So we're not really getting a change in regulation. The ETN ban was just a self-imposed ban that the FCA put in place, and they're just lifting it. So there isn't a specific change in regulation in that. It's not going to suddenly become regulated to the point where it's covered by the FSCS scheme. It's still going to prevent some hurdles, some challenges to get exposure for your clients, but you can. And there are routes to exposure now, and those routes to exposure probably won't change post 8th of October until we get more regulatory clarity, which we're expecting in 2026. I'm not going to tell you what those are. That's my IP. So please reach out to find out more.
Absolutely.
But yeah, the FCA are just lifting that self-imposed ban. The price of Bitcoin at the moment is about $115,000. So, this is where I get a bit facetious. The FCA have protected us from an 11x return in 4 years.
Yeah, and there's obviously been that shift from the regulator then of thinking, well, okay, we do need to lift that ban. Then there's a reason behind that. I think some of the quotes were that it's more of an established mainstream thing now. It's changed. So I suppose there's a lot of people out there that would criticize the FCA, and rightly or wrongly, on some of the things it does, but it at least has sort of said, okay, well, we've had to go back on something there and relook at that, and it's got a roadmap that it is working towards, I suppose, and like you say, in a year's time or something, we may find out a little bit more. So in that sort of sense, then clients will be able to access stuff, and the UK potentially has been a little bit behind some other countries and other markets, but I suppose advisors still might have that concern of that FSCS that you mentioned, and I don't know what their professional indemnity insurance, there's lots of talk around that just sort of generally as well. Is that a concern, that it's like, hold on, if we give advice on this, our neck's on the line? What happens if there's a complaint later on?
Great question. And I just want to highlight that I was being facetious previously. So advisors have not been wrong to not advise on this previously, right? It was prudent. It was correct, right? Until literally the last couple of years, we have had a lot of uncertainty in Bitcoin. There were exchange collapses in Mt. Gox and FTX. FTX especially, working with essentially fractional reserve banking with a finite asset was never going to work. So, I do not fault advisors. And to an extent, I don't fault the FCA, right? So, there was a lot of uncertainty. We are through that now, right? This is an established asset. So I fully appreciate that it not being protected by the FSCS could present a bit of a challenge, which is why, as I think I've mentioned, I do not recommend anyone to buy Bitcoin. Do your own research. But if you were to start allocating to Bitcoin, start with 1%, 2%, right? Maximum. If that goes to zero, and there's a couple of reasons, right? So, maybe you don't fully understand it. There is reputational risk and potentially financial risk to the advisors. So if you start with 1% and Bitcoin goes to zero, right, becomes a donut, 1% is a bad day in the stock market for your portfolio, right? No one's going to notice it. But if it goes 100x in the next 10 to 20 years, everyone's going to notice it, right? The client wins, you win, your firm wins, everyone wins. So until we get more regulatory clarity, some may not do it. But I know some advisors that are moving very, very quickly, because at the date of recording, the time of recording, there is 26 days. That's it, 26 days. And, however many working days that is, 16 or whatever, until your clients can buy Bitcoin in their tax wrappers with or without your professional guidance.
Yeah.
And so I know of a lot of advisors that are moving very quickly to try and find some exposure to Bitcoin within classic, maybe a classic 60-40 portfolio that just becomes 59-39, 2% Bitcoin, and to move their clients into it as soon as possible. And this is where we'll start to see game theory play out. If Bitcoin does what Bitcoiners expect it to do over the next 5 to 10 years, then the advisors who don't at least talk about it now, right, and have a good evidence-based reason not to recommend it. But advisors that don't recommend it. And if it goes 100x in the next 10 years, right? And just so we're clear, it's done 150x in the last 9 years. So I don't expect those returns to continue, but I wouldn't be shocked if it goes 100x in the next 20 years. Well, advisors will start to lose clients, assets, and staff to the advisors that are moving small allocations into it now.
Yeah.
And then, hopefully we're expecting more regulatory clarity at some point in 2026. It's very funny. The FCA have had this timeline on crypto, and it's, 3 or 4 years, and every milestone is, certainly within a month, right? They've said, we'll talk about this here. Their final consultation on this is due in 2026. It's a 365-day window for delivery. So there's a lot of uncertainty there about when it's coming.
Yeah, absolutely. I think that's a lot of the things with the regulation. And I suppose for the regulator itself, it's like, well, like you said, there's a lot of learning to be done, a lot of education, and potentially there's people within that sort of going, okay, this is new to us. So it is hard. We always sort of have to try, and we've got all of these things to balance already. I think I've often sort of said, sometimes financial advisors might have a tendency to forget that the regulator also regulates on other areas of the market as well, and not just financial advice. But I suppose we also talk about that diversification piece, and with consumer duty as well, that there's potentially that thing of, well, explaining to clients what this means. And I think even if an advisor does educate themselves, comes to the conclusion, this isn't something I feel comfortable on, at least they could have that conversation with their client. And potentially there will be the advisors that might want to specialize in this area. And a bit like the protection conversation, sometimes there's some advisors that just do not want to do that, but they might signpost to, oh, our friends down the road, they specialize in this, or other sort of services that you need. So do you see that might be the thing, that people specialize in this area, and then hopefully the advisor community can sort of signpost when needed if they don't feel comfortable themselves?
There's a couple of things there to touch on. So within the Bitcoin community, there's a saying that Bitcoin is for anyone, but it's not for everyone.
Yeah.
So absolutely, right? As I've said, I don't recommend anyone buys it. I recommend everyone educates themselves on it. There will be some advice firms, and there are some that have very clearly said it to me, that will say, we are never going to do this. And that's fine. And there will be some clients who also say, I'm not interested in this. A lot of the financial advisors that I've met are very well established in their 50s, 30 years into this profession. All of their clients have done very, very well. They're all high net worth or ultra net worth. They probably don't need Bitcoin, right? They have done very well from the money printing. They've got homes, second homes. They own them outright. They've got very large pension accounts. They're probably not going to need Bitcoin, and that's fine. So, some of those firms will never advise on it. But if you're a young upstart or startup and you're trying to make your way in the world, both as client and advisor firm, you may need Bitcoin more, right? Because you're trying to play catch up, or you're just trying to build a life for yourself. So some will definitely do it. And then bringing it back to the last thing you asked as part of that question, will there be firms that specialize in this? My answer to that is 100% yes. I'm in discussions with financial advisors who are already trying to figure out how they do this, starting new firms that are specializing in this, because my inbox is also full of retail clients, right? So everything I do is aimed at financial advisors, but Bitcoiners gravitate to me. Yeah. And I'm trying to connect them to the right IFA firms. And it has very clearly crossed my mind, why am I doing this? Why don't I just start my own Bitcoin firm? So yes, there will be specialists, and, watch this space.
But in terms of clients, like we said about that curiosity and stuff as well, and I think we were talking about sort of misconceptions earlier, but there's also a lot of misinformation. And I suppose that's a thing as well, that there's people like you on social media, and you've taken the time to educate yourself in this area. You're still learning. I'm sure, like you said, if there's holes in your knowledge, you're trying to fill those. But we can be bombarded with content and with information, and it's hard to know what we can trust and what we can't. And that's where obviously financial advice is so important, just generally in terms of, okay, I've got this financial headache, I don't know what to do, I'll go and speak to an advisor, and they're qualified and they know they can take that burden away. But there's just so much. And I suppose if a lot of young people are interested, they not all, but could potentially be easily influenced by certain things. And if it, we're all sort of told if it looks too good to be true, then it probably is too good to be true. So there's a lot of that to juggle and get our heads around as well.
Absolutely. So the average demography of Bitcoin is 35 to 54, right? The average demography of crypto is much younger. It's 18 to 34, right? So over half of crypto owners are in the 18 to 34 because they're chasing quick bucks, quick wins, because they feel the effects, the secondary and tertiary effects of currency debasement. They feel it even more, right? You've got 18-year-olds no longer looking at university as a good ROI. Why do you want to leave university with 60K's worth of debt? Starting salary is 25. You're never going to repay this. AI is coming for all the jobs and I'm broke. What's the way out? Right. So someone on TikTok offering 100x returns in 2 weeks, they're going to fall for that. And you're absolutely correct in that this is a huge paradigm shift, right? This is a new technology. New technology always eats the incumbent, right? You mentioned Blockbuster. Kodak invented the digital camera in 1975, didn't bring it to market because it would ruin their film business. They got eaten by digital cameras. Then they got eaten, which got eaten by the camera phone. Right? New tech always eats the incumbent. Getting your head around new tech can be tricky. I think I mentioned earlier, if you're really lucky, you'll get up to speed in 100 hours. Going to do a bit of a shameless plug here, Katey, if that's okay. So we sell, or our training for advisors, which is webinars and workshops, the webinars are 90 minutes. The workshops are 2 hours, 2.5 hours. We're not really selling you the training. What we're really selling you is we're going to save you 98 hours. So we'll give you all of the information you need to talk calmly and confidently about Bitcoin. And you only have to do it once. And I'll give you all of the content, all the slides. So I've done the 10,000 hours of research that it takes to become an expert on anything. And I've distilled that down into what you need in less than 2 hours. And then you just need to stay up to date with regulatory stuff, which I do for free through my podcast, my newsletter, LinkedIn. I know that you see the posts, the content that we put out there. So we have 3 currencies, right? Knowledge, time, and money. And we use 2 of them to get the other one. If you are going to want to talk confidently to your clients about Bitcoin, you are going to pay for that with time or money. And I'm offering to exchange a bit of money to save you a ton of time.
Out of interest, can they pay you in Bitcoin?
Do you know what? Not yet. I haven't managed to figure that out, but it's coming. It's a bit of a tricky integration on the website, and it costs a bit of money. So yes, ultimately yes. But certainly, if the 4-year cycle plays out, we haven't even touched on the 4-year cycle, but if the 4-year cycle plays out as it has done historically, Bitcoin has a very observable 4-year cycle historically. It's 3 years up, 1 year down. And if that plays out, then next year could see another extended bear market, 12-month bear market. At that point, I definitely want to be getting paid in Bitcoin, right? Because then we'd be expecting 3 years up.
I think, we were saying earlier about sort of advisors not being sure, but when I started to hear people talk about it a little bit more and sort of that intrigue and find out, I think some people were saying, okay, you obviously wouldn't invest your house, you wouldn't invest everything, but maybe that sort of play money that people can afford to sort of, let's test the water, let's see what happens. And I think, a few advisors have been doing that themselves and other people in that sort of space. I think we've seen BlackRock has got a product sort of ready for that 8th of October date that you mentioned, where the ban lifts.
They're trying, I'm not sure they'll meet that deadline, but yeah, they're trying to bring their IBIT ETF, best performing ETF in history, by the way, 80 billion in assets in 18 months. I think it got to the same volume of assets as their gold ETF in something like 6 to 8 months, and it took the gold ETF 22 years. But there are big players, and everyone. BlackRock got approved by the FCA in April, and that got the Bitcoin community's spidey sense tingling. And then, literally within 6 weeks, the FCA announced that there's a consultation on the ETNs, and then 6 weeks later, they announced they're lifting it. So BlackRock, love them or hate them, they clearly have a lot of lobbying influence.
Yeah, and I'm sure obviously others will follow suit and be trying to look into that if they're not already doing so. And if there are advisors that are looking themselves and sort of thinking, okay, well, maybe I'll understand this a little bit more if I invest in it, how would people go about that? How do you go about that?
Oof, that's a can of worms. We'll make this very quick. You can invest on chain, right? Which is where you're actually holding real Bitcoin. So Bitcoin is a blockchain. All of the Bitcoin is always on the blockchain, right? It's always there. It doesn't move. You just, within what's called a wallet, you essentially say, this bit is mine. This bit of the blockchain is mine, right? So you can do that. Currently can't do that within any tax wrappers, with the exception of SaaS pensions. So SaaS pensions, you can buy on-chain Bitcoin. I'm in the process of doing that. Or you can buy paper Bitcoin, which is ETFs, ETNs. If you are a professional or a sophisticated investor, you can do that now. And then if you are a retail investor, you can do that from the 8th of October. So 26 days from now. So those are really the three routes to Bitcoin that I'm aware of. There may be others. I'm not an oracle on this. As you say, I am still learning myself. And I've done 10,000 hours of practice on this, and there are vast swathes of Bitcoin that I have no idea about. So, I understand mining to an extent, but, running a node, the technicalities of the software on node, I've got no idea. And one day, maybe.
Well, I mean, if you invest another 10,000 hours, then I'll get you to tell me about it, because I'm not sure I will be able to dedicate the time to that specific area. But very interesting in what I have learned today and from other conversations with you. And yeah, I think it's something for advisors to think about at the very least, even if they still come to the same conclusion. But I think it's always that sort of thing of trying to educate yourself and being aware of the things that your clients may come to you and be asking you about, and that's going to sort of serve people well. And having met some advisors, I came to your event that you put on, seeing people there of that curiosity and actually saying within their firm, this is something we should be looking into, and if you don't want to, then maybe I can. And just because a few clients have asked me already, and that's sort of the start of things to come, I would imagine, if we are starting to see more of that, and if the regulator's talking about these things a little bit more as well, it's just opening up those conversations.
Absolutely. I would recommend any advisor watching or listening to this, in the Bitcoin community, we're very often very quick to jump to solution. And we see Bitcoin as a solution. But we haven't been very good at articulating the problem. There is an amazing video by a chap called Joe Bryan, who couldn't make the last meetup, but might make the next one, Katey, and I know that you're hoping to make that one. He is a lovely guy, one of the most intelligent people I've ever met. And he did a brilliant video that was released in February this year, and it's called What's the Problem? And it's 30 minutes long. It's always a link into all of my podcasts. It's always there in the show notes, because I believe it is essential viewing for people in financial services. And I actually think it's essential viewing for everyone, because it very, very clearly highlights all of the primary, secondary, and tertiary order effects of money printing. And they affect all of us, right? So very quickly, the lack of quality in our food, unemployment, health issues, mental health issues, asset price ballooning, it all comes back to government printing money. So please go and watch that video. That's where I would suggest people start. There we go.
We've all got some homework to go away with. Dan, thank you very much for joining us today and talking us through that. And I'm sure you'll probably get inundated with people at least wanting to find out a little bit more as well. So thank you very much for your time.
An absolute pleasure. Let's do it again.
Absolutely. Thank you.